Hello everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Friday the 13th of August. Now, is it going to be a horror show today? Well, markets are eerily quiet moving into this session, but some of the volatility gauges that we're looking at don't really suggest a great deal is going to be happening on the horizon. Looking at the likes of the VIX falling away once more, also looking at average true ranges for some of these Forex majors which are at multi-month lows. So it really suggests that a summer lull is starting to really take hold on trading. With regards to the dollar strengthening that we saw early part of the week following on from the payrolls report, we've seen that starting to drift slightly, a little bit of a waning of that dollar move as treasury yields start to also just sort of roll a little bit over. It just seems as though that, again, as I said, that some of the reaction that we saw from that payrolls report is just now starting to dissipate slightly. That is affecting through Forex and also commodity prices as well. But also we've seen that equity markets continue just to drift higher somewhat rather than move through the gears and move decisively strongly higher. So with regards to what can affect markets today, the economic calendar is showing the Michigan sentiment numbers later today. And I think we're looking out for probably the inflation component there really being the takeaway number there. Just seeing whether that confirms the recent suggestions that inflation in the US is starting to peak. In terms of the charts we're looking out for today, well, we've got the cable chart, which continues to drift lower, actually. The dollar strengthening is actually still playing out through cable, and it's now looking to test a key level of near-term support. So looking at the reaction at that, but also looking at the gold price, which continues to rebound. Again, it's testing a crucial level of near-term resistance, and how the bulls react around here will be key. And also looking at the oil price, which has just once more started to turn lower again, looking at the technical outlook on that. So let's have a look at these charts. And also the INFINOX MT5 platform now. And we can just see that cable is just drifting lower in recent sessions. It had that rally in late July, which has rolled over into August. And you can see that on the RSI, it's actually more of a drifting phase. But I have now drawn in this downtrend, and that downtrend needs to be watched, I think, because essentially you need to now break that downtrend, and I'd be looking at that lower reaction high at 138.85 to be a gauge of that in the coming days. And it's interesting that this downtrend also now is flanked by the 55-day moving average as well. But essentially, if you sort of zoom out, the market is still in this broad trading range, trading underneath the sort of mid-range pivot around 140. But essentially, it's a basis of support around the 138 big figure, which has previously been a level of support, and how the market reacts around there could start to find a bit of support, but it needs to get back above that downtrend to really start to re-engage the bull outlook once more, because it is essentially just in a near-term drift phase, but needs to break that downtrend to sort of come out of that drifting lower phase. And also the gold chart, just zooming out here, you can see that the importance of this pivot band, 1,750 bucks up to 1765 area, is this band of old reaction highs and lows, which makes a pivot, and the market is now testing that on the rebound. But essentially, I still see this as an oversold rally with the RSI unwinding from that 25 level, and it's just essentially, I think it's going to be renewing downside potential, but how the market now reacts, I think around 1765 will be key. If you can get through that, then it reopens the 1790 area. But I'm going to be looking up for another lower high as this rebound just loses a bit of steam. Not done yet, but I think it is in this rebound phase. But I think I'd be looking out for another lower high between 65 and 90. To really sort of give an opportunity to sell once more, I think, because these moving averages are moving lower, the configuration of momentum is also negative. So I think a near-term rally within a medium-term sell phase still on gold. And finally on oil, just zoom out one more level, you can see this uptrend channel that we've had on oil, but essentially I think in the last sort of month or so really, it's turned more into a near-term corrective sort of phase of lower highs and lower highs and sort of attraction back towards the bottom of this uptrend channel. And you can see that confirmed through the momentum where this latest rebound has failed in the mid-40s on RSI. That also came around sort of essentially a bit of a pivot area around the 72.40 area was the level of resistance. You've got the falling moving average on the 21-day. And I think essentially it sort of points towards pressure on the uptrend and how the market reacts once more at that uptrend. It seems to test that uptrend on an intraday basis and rebound. So I think how the market reacts to that uptrend will be key. But I think there is another test of that uptrend on the way. Really needs to get above, I think, 73.15 to really suggest the market is rebounding again. But essentially then you'd probably be looking for a rebound towards 76.50 area. But I think at the moment we're still playing out the lower highs game on oil as we push towards a test of that uptrend. Thank you for watching this video. I hope you found it informative for your trading. Join me again on Monday where we'll be looking ahead to the new trading week. So I'll leave you with the INFINOX support and resistance table and I will speak to you then. Thank you very much.